is a more cautious consumer showing up in retail names, and which companies are best positioned? We are looking at the big picture with the Yahoo Finance Playbook, and here to discuss, we've got Corey Tarlowe, Senior Vice President of Equity Research at Jefferies, and David Swartz, Morningstar Equity Analyst. Good to have both of you on today. Let me just get your take. First of all, David, asking you about where you think the consumer is today.
In my space, which is primarily apparel and apparel retailers, the outlook is not very good this year. I think a lot of companies were expecting that this year would be a stronger year after a bit of a shaky 2023, but most of them have given kind of disappointing outlooks, at least for the first half of the year, and they don't see a lot of strong trends in consumer spending right now on apparel, as well as other categories like home goods and beauty that I cover.
Corey, same question to you. Maybe just start off kind of high level, 30,000 foot view, Corey. Kind of what are you seeing with the consumer based on your coverage universe?
Sure. Good afternoon, and thank you so much for having me. So I cover Steve Madden, and this morning, they announced results that were relatively strong, and they said that the consumer is still willing to spend, but they're still seeing a little bit of hesitancy. And we don't cover Amazon, but Amazon said last night that consumers are still spending, but you are seeing a little bit of trade down. And we had Walmart executives in our offices 2 weeks ago, and they said pretty much the same thing. They said, quote unquote, the consumer's not gangbusters, but they are spending. They are trading down in areas where they can. What we're seeing is what we call customized moderation, where consumers are still focusing on the key and core items that are in their basket and brands that they appreciate that they don't necessarily want to change from, but they are rotating a little bit more into private label, into areas where they can do so. And even yesterday, we saw Walmart roll out a new private label brand on the back of this. So I think it just speaks to this overall sentiment where you have consumers still willing to spend, but still being very value conscious.
Yeah, so Corey, let's talk about how you turn that into an investment thesis. I mean, if it is about the consumer being a little more value conscious, is it about investing in names like a Walmart, like a Target, that cover more of the bases, the everyday, as opposed to more specialized brands?
Absolutely. Specifically with Walmart, it's a company that has not only what you need, but also what you want, because 2/3 of the sales are food, and 1/3 of the sales are non-food. And by the way, that 2/3 of the sales that are food used to be much less than that. So they've continued to skew more and more into grocery. They're skewing more and more into private label, obviously, as we've seen yesterday. So that's a significant lever of growth that they can pull. And this is really just going to mean higher numbers for Walmart over time, we think. And if you just take a 30,000 foot view on a weekly basis, Walmart caters to 150 million people in the US, 250 million people globally. And they're seeing traffic up, at least in the last quarter, up 4%. And our data is showing fairly strong traffic metrics as well. So with millions more people visiting Walmart on a regular basis, spending more in food, I think that spells very well for the future prospects for the Walmart stock.
David, I want to bring you back here as well. So if broadly speaking, David, we have a consumer who, may be a bit more careful, prudent, value conscious. For investors listening right now, how do you put money to work in that theme, David? When you look across your coverage universe, where's the opportunity? For example, Macys, I know you have a buy on.
Yeah, I think there are undervalued opportunities because I think there is a certain amount of pessimism right now. And this is reflected in some of the valuations. And so you mentioned Macys. So Macys right now is undergoing another restructuring. Certainly past restructurings have not had great success, but actually Macys may be sold. There is a group trying to buy Macys for $24 a share, and the stock is trading well below that price. I think that the group that is looking to buy Macys may actually raise their bid to a higher offer, and there is a possibility that it could be taken private. So for someone who is willing to look past sort of the typical, really negative view of department stores and maybe look past what we're seeing right now with consumer spending being a little bit uneven, I think there are value opportunities out there like Macys.
David, to follow up on that point, from a consumer perspective, is it still about value, as Corey pointed out, when you talk about apparel, more specialized brands, or is it about the brands that really understand their consumer, even if that price point is a little higher?
It's very hard to generalize because we're definitely seeing some companies that are doing fine. I mean, Ralph Lauren, for example, would be one. Ralph Lauren does not sell discount products, but its stock price is way up there, and it's been doing well. There are others that are not doing so well, and it really is partly their own fault. It's really company-specific problems and not so much to do with the economy. Nordstrom, for example, is another one that comes to mind. Nordstrom has been struggling quite a bit, really, since the pandemic. Right now, the Nordstrom brothers who run the company are looking to potentially take it private because they think that there is a stronger future for the company than we're seeing right now. But Nordstrom is a company that is really struggling to meet what consumers are looking for, and that is reflected in the stock price.
Corey, back to you. I look across companies you cover. Corey, you got a number of buys. Is there one here, Corey, you'd rate your number one buy with some near-term catalysts?
Sure. So we think about it by market cap and large cap. We have three that we like. So that's Walmart, Costco, and TJX. In mid cap, it's a company called Murphy's. And then in small cap, we get really excited about a company, Abercrombie and Fitch. So those would be kind of our top 5 picks across the 3 different market cap stratas that we look at. Happy to dive into Abercrombie here because that's one that reports upcoming and fairly soon, and that's one where we see a lot of upside, and it's really driven by the flagship Abercrombie and Fitch brand. They're gaining a bunch of new customers. You're seeing really strong growth, not only in stores but online, and the product is really resonating strongly with a new demographic. So this is a company that used to cater to teenagers, and it used to cannibalize its core Hollister business. And now you're aging up a customer that's aged 24 to 45, both men and women. Both businesses in the men's and women's business for Abercrombie are hitting records. New dresses business that's performing very, very well with a new wedding shop as well. So all the while, you're seeing margins rise too, and valuations in line with historical average. So we think that there's a number story here, and we also think that there's multiple expansion ahead for Abercrombie too.
Corey, David, thank you so much both for joining the show today. Appreciate it.